If you are an investor looking to build serious long-term wealth, real estate is almost certainly part of your strategy. But that journey, well, it's often derailed by one single word: management. Today, we are locking onto one of the Midwest's most compelling investment destinations, Kansas City.
That's right. Our mission today is highly specific. We've synthesized 7 distinct sources, all focused on the operational value proposition of Alpine Property Management in Kansas City into one single comprehensive and, actionable guide.
So we're going beyond the typical sales pitch.
Exactly. For investors who are looking to enter the KC market, or for those already holding assets, this deep dive will dissect exactly how professional management transforms both a property's net operating income and, critically, the investor's peace of mind.
I think that's essential because Kansas City is absolutely a magnet right now. You see capital flowing in from both coasts. We're going to break down why KC is so appealing, and then we'll analyze how a company like Alpine acts not merely as a vendor, but as a strategic partner across every single stage of the investment lifecycle.
And we mean that literally.
Yes, literally. Starting before you even close on a property, continuing right through to complex financial reporting and tax organization at year-end.
To start this conversation, we really have to establish the undeniable market fundamentals that draw investors nationwide to Kansas City. Year over year, KC is consistently positioned as one of the most attractive, resilient real estate markets in the entire Midwest, often outperforming much larger cities.
Okay, let's examine the raw appeal. What metrics are pulling investment dollars here, especially when you compare KC against, the classic coastal investment hubs that have seen wild volatility lately?
Well, it really boils down to a powerful combination of affordability, stability, and high cash flow potential. When we look at the data, KC offers dramatically affordable home prices compared to markets like Los Angeles, Denver, Seattle, or even nearby Chicago.
Right.
This lower entry barrier is key for investors looking to scale quickly. But the critical piece is that KC offers persistently high rent-to-value ratios, often cited as superior to those coastal regions.
So what you're saying is that the price tag to acquire the asset is lower, but the rents it generates are strong enough to guarantee reliable, positive cash flow from day one. That's the classic definition of an investor's ideal market scenario.
Precisely. And this stability is supported by solid economic fundamentals. The market is structurally sound, with strong job sector growth that maintains diverse, stable tenant demand year-round.
What kind of sectors are we talking about?
We're seeing major expansion in logistics, which, benefits from KC's central location. There's significant growth in healthcare due to major regional medical centers and a budding tech hub.
That economic diversity shields the market against downturns focused on a single sector. And from a legal standpoint, what is the environment like for the landlord?
That's another layer of attraction. KC generally maintains what we call landlord-friendly regulations.
Okay.
Now, this needs specific context because we're talking about a metro area that spans 2 states, Missouri and Kansas. Alpine is expert in navigating both.
So what's the difference?
For example, in Missouri, the timeline for filing an eviction and the mandatory notice period required are typically shorter than those across the state line in Kansas.
Ah, I see.
This predictability and shorter legal runway is highly valued by investors, and it's a key regulatory stability factor that Alpine helps investors manage.
That paints a really compelling picture for attracting capital from anywhere in the country. But if the market is so attractive to out-of-state investors who aren't there to drive the streets and meet the neighbors, how do they actually execute successfully on the ground?
That leads directly to the critical role of local expertise. It's everything. Success in KC, especially given the rapid neighborhood diversification, depends entirely on deep, nuanced local knowledge. If you are an out-of-state investor, you cannot succeed optimally without an expert partner on the ground.
And this is where a company like Alpine comes in.
Exactly. This is where Alpine Property Management Kansas City is positioned as the required partner. They bring over a decade of diverse management experience across the entire metro area, having managed hundreds of different types of units.
A decade of experience isn't just time, right? It means they have institutional memory. They've seen multiple economic cycles, significant seasonal shifts, and different neighborhoods rising and falling in demand.
That's the perfect way to put it. Alpine's knowledge base is granular. It covers the specific characteristics of different neighborhoods, the nuances of tenant profiles in those areas, and the precise regulatory environments on both sides of the state line.
So they know the little things.
All the little things. including complex operational nuances like mastering Section 8 requirements and, fundamentally, the specific seasonal maintenance schedules. They understand that what makes a rental successful in Lee's Summit may not work in the Northland, and they have the institutional memory to navigate KC's specific challenges, like those extreme temperature swings that lead to plumbing disasters.
We're definitely going to have to talk more about those plumbing disasters later.
But we will.
Okay, let's talk about the timeline, because this is where I think a lot of people get it wrong. Investors often overlook the property manager before they purchase. They typically wait until closing day to start scrambling for management. How does Alpine fundamentally flip that script and help investors identify profitable opportunities before they've committed the capital?
This is a crucial pivot point. This is where Alpine moves from being a service vendor to a strategic acquisition partner. Their analysis goes far beyond simple listings found on Zillow or the MLS. Alpine helps investors separate what looks like a good deal on a spreadsheet from what is truly a great investment that will deliver long-term, scalable returns.
Let's get technical here. How do they offer insights that an investor, maybe using standard online research tools, just wouldn't be able to access?
It boils down to proprietary local market insight that you truly cannot replicate from 1,000 miles away. A seasoned Alpine team knows instantly which specific neighborhoods are currently oversaturated with rental inventory, which are showing early signs of accelerated growth, and crucially, where the absolute best cash-on-cash returns are currently being realized.
How do they know that?
This intelligence is based on aggregating public tax records, MLS historical data, and cross-referencing their own internal performance metrics across similar vintage properties in neighboring ZIP codes.
So they're essentially stress testing the investment thesis before the investor has spent a dime on closing costs. They're targeting the exact cap rate potential.
Exactly. This happens through what they call ROI-focused property analysis. Alpine runs detailed rental performance projections before closing.
Before closing.
Before closing.
Yeah.
They don't rely on broker estimates. They use their own performance data. This analysis includes a precise estimated rent range based on current market comparable analysis. And they're factoring in actual achieved rents, not just listed rents. They project expected maintenance and turnover costs based on the property's age and type and calculate long-term cash-on-cash returns. This data-driven analysis gives investors the confidence to move quickly and make profitable decisions.
I have to imagine that network also gives them a significant competitive advantage in sourcing deals, especially in a market as hot as KC.
Absolutely. Because Alpine manages such a vast portfolio across the metro, they gain privileged access to off-market opportunities before they ever hit the multiple listing service. This is an enormous competitive advantage.
What kind of opportunities are we talking about?
These might include current owners ready to quietly sell occupied rentals, establish turnkey properties with high-quality existing tenants, or even distressed homes that are perfect targets for investors utilizing the BRRR strategy.
That's buy, rehab, rent, refinance, repeat.
Exactly. Their robust relationships with agents, contractors, and other institutional investors mean their clients often get first-mover advantage in deal flow.
And once a promising property is identified, say one of those distressed homes for a BRRR strategy, Alpine guides the investor through the necessary preparations. That renovation assessment is crucial, especially if you're buying sight unseen.
The guidance on making it rent-ready is vital for mitigating risk and maximizing initial rental appeal. Alpine helps assess the precise renovation budgets needed to hit their target rent. They recommend specific, proven contractor partnerships, which is huge, and advise on tenant-attracting upgrades that offer the highest ROI. Things like specific flooring types, modern lighting, and Alpine uses real-time market analytics, comparable performance data gleaned from their own portfolio across various submarkets, and an acute understanding of seasonal patterns to find the sweet spot.
The sweet spot.
That is the precise intersection of maximum achievable rent and minimal time on market. This ensures stronger, optimized cash flow month after month.
And faster leasing means lower vacancy. We know that every empty day is lost income. So how does Alpine's operational machine minimize that costly downtime?
They minimize downtime through sheer operational speed and technical efficiency. First, they deploy professional, targeted marketing, not just basic listings, but optimizing the digital syndication footprint.
What does that mean exactly?
It means tracking which paid and organic listing platforms in the KC area generate the highest quality leads within 48 hours of posting, and then optimizing their spend to find the best tenants fastest. They ensure quick response times to inquiries, utilize seamless digital application processes, and offer flexible showing times.
So it's really about minimizing the transition time between tenants.
Crucially, yes. Alpine actively pre-markets upcoming vacancies. They don't wait for the keys to be handed over. They start marketing and screening prospective tenants as soon as a notice to vacate is received.
Wow.
This disciplined approach aims to ensure that a new tenant is ready to move in as soon as the turnover, clean, and maintenance are complete, dramatically minimizing the gap and maximizing annual occupancy rates.
That seamless turnover process is where so many self-managing landlords bleed money. Now let's talk about tenant screening. For the investor, why is Alpine's high-level screening process so important for the long-term bottom line?
This is the single biggest factor in risk mitigation. I can't stress this enough. Bad tenants, those with chronic late payments, behavioral issues, or property damage histories, can easily wipe out months, if not a full year, of profits.
Oh, yeah. We've all heard those horror stories of the DIY landlord who trusted a handshake, only to find the tenant causing costly damage or requiring a lengthy eviction.
Exactly. Alpine's tenant screening prioritizes thoroughness, legal consistency, and long-term stability in the portfolio.
So what are the key technical components of that thorough screening process that go beyond just a simple credit score check?
It is exhaustive and designed to assess financial stability and reliability. They conduct nationwide background and credit checks, looking not just at the score, but at debt-to-income ratios and payment reliability.
Okay.
They conduct meticulous employment and income verification, demanding specific proof of stable income that meets a high threshold. They enforce strict rental history checks, including direct reference calls to previous landlords and detailed eviction record searches.
And the legal side?
And critically, they adhere strictly to all fair housing compliance laws throughout the entire process, which is a massive layer of legal protection for the investor.
So the outcome isn't just a signed lease. It's placing a tenant who is reliable, respectful, and stable.
Exactly. The outcome is reliable tenants who lead to predictable, on-time payments, significantly less wear and tear on the physical asset, and far fewer disputes or the need for costly, time-consuming evictions. This focus on tenant quality is the foundational element that supports long-term profitability and predictable cash flow.
Okay, here's where we need to dive into the operational linchpin. Maintenance is often cited as the biggest source of stress, unpredictable expense, and time drain for self-managing landlords. How does Alpine take that massive, chaotic variable and transform it into a predictable, proactive system that preserves asset value?
They completely redefine maintenance by shifting the focus from reactive damage control to disciplined, preventive asset protection.
Okay, so proactive, not reactive.
Exactly. This proactive approach is essential for maintaining the long-term value of the property and, crucially, reducing long-term costs. When an investor defers maintenance, they might save a few dollars this month, but they inevitably set themselves up for enormous, unpredictable emergency bills down the line.
So tell us about the infrastructure of their maintenance system. Who handles the fixes, and how is the quality and cost controlled?
They manage the entire system end-to-end, which includes 247 repair request handling and a highly coordinated response. The core of this is their vetted vendor network. They don't just use the cheapest contractor, they utilize a trusted network of local vendors who are fully vetted, insured, and licensed.
And these vendors work at scale, I assume.
Yes, this network operates on pre-negotiated volume rates, ensuring quality work at fair prices. The investor doesn't have to scramble for a roofer during a storm or worry if the quote they received is 30% above market rate. And transparency is built in. Every repair request, cost estimate, and completion date is meticulously logged in the owner portal.
That sounds great for emergencies, but how do they handle the proactive side-catching, those small, slow-burn issues before they snowball into a catastrophe?
That's achieved through routine, scheduled property inspections throughout the year. And these are not cursory checks. These inspections ensure the homes are being properly cared for by the tenants and, most importantly, allow Alpine to catch minor maintenance issues, like a failing appliance seal, a compromised gutter, or minor roof wear before they turn into expensive emergencies.
So things like massive water damage, mold, or a catastrophic HVAC breakdown.
That's what we're trying to avoid. This diligence is core asset protection.
To give us a tangible, high-stakes example of this proactive mindset, the sources detailed a specialized cold weather protocol, which is supremely relevant given Kansas City's climate volatility. Let's fully dissect that operational checklist.
This specialized protocol is a prime illustration of their operational depth. Their cold weather move-in process is a detailed, mandatory checklist designed explicitly to prevent common seasonal disasters, particularly frozen pipes and furnace failures.
Okay, walk me through it. What are the distinct phases of that protocol?
It begins before a tenant even gets the keys. Phase 1. Critical system checks. They conduct pre-move inspections of every critical system. The HVAC unit is tested for peak efficiency, the plumbing lines are checked for vulnerable exposed areas, and insulation systems are confirmed.
Okay, so that's before anyone's even in the property.
Before anyone's there. Phase 2. Scheduling and logistics. They coordinate move-in scheduling carefully around harsh weather forecasts to prevent icy day disasters that could lead to injury or logistical delays.
Smart.
Phase 3. Tenant education. This is a big one. A dedicated part of the move-in process involves educating the tenant on critical winter maintenance, specifically focusing on preventing frozen pipes, where to leave cabinets open, what temperature minimums to maintain.
So you're empowering the tenant to help protect the asset.
You have to. And Phase 4, post-move follow-up. They conduct follow-up visits post-move to confirm that the systems are running efficiently and safely now that the home is occupied. This 4-phase planning minimizes costly emergency service calls and protects the property when it's most vulnerable to extreme financial risk. With the asset protected and the high-quality tenant in place, the investor's focus shifts to monitoring performance, ensuring compliance, and maintaining predictable income flow. Alpine's communication philosophy is defined by necessity. Clear, consistent communication. Exactly when the owner needs intervention, never when they don't need to be bothered with minor operational noise.
That balance must be tricky. How do they provide that consistent transparency without demanding daily attention from the remote owner?
They achieve this through the backbone of their operation, the Secure Owner Portal. This portal guarantees 24/7 real-time access for complete financial transparency. For a remote investor, this provides a single source of truth for all property activity, eliminating the need for scattered emails or phone calls just to check status.
What specific financial documentation is instantly accessible through that portal that is crucial for financial oversight and specifically for tax preparation?
Everything necessary for a streamlined financial life and tax season. I mean, everything. This includes, but is not limited to, high-resolution scans of the tenant leases, full payment history detailing rent collected, and any outstanding balances, detailed logs of all maintenance requests, and completed work orders.
So I can see every single invoice, every request in real time.
Every single one. Plus, comprehensive monthly financial statements, detailed expense breakdowns categorized by type, all vendor invoices, and, most critically, organized year-end reports, the 1099s and summarized statements ready for the investor's accountant. That granular, organized reporting transforms tax time from a scramble into a simple transfer of data.
While the portal handles routine data, I imagine there are certain critical events that require immediate personal attention regardless of digital updates. What are the key communication triggers that necessitate a direct contact?
Absolutely. The system is designed to trigger immediate, direct action for major events. Alpine reaches out immediately for matters such as emergency maintenance that exceeds the pre-approved spending limit established in the management agreement.
Okay, that makes sense.
Any significant lease violations or severe tenant behavioral issues that require rapid decision-making, any potential property damage or insurance-related matters, and any critical legal updates or compliance changes that might affect the property. Speed and clear communication are prioritized when dollars are at risk.
And beyond emergencies, what updates keep the investor informed about the predictable, routine management cycle?
They manage key lifecycle events with consistent reporting. Routine updates are given when a lease renewal is signed or declined, when rent increases take effect, and immediately upon receiving a notice to vacate letter.
And what about turnover?
Detailed condition reports, always accompanied by photo documentation, are provided during both the move-in and move-out inspections. This documentation process establishes clear accountability, helps determine security deposit deductions, and documents the property's condition at every transition point.
And finally, there's the element of continuous improvement. We saw that Alpine uses quarterly data reviews to refine its internal systems. What tangible insights did their most recent data review, let's say from the end of September, teach them about optimizing performance?
Their quarterly review identified several key insights that immediately refined their operational strategy moving into the next quarter. First, they confirmed that achieving exceptional responsiveness and deploying clear, empathetic communication builds profound tenant trust.
Which translates to what?
Which translates directly into higher lease renewal rates and significantly faster rent payments. Second, their data reiterated, with specific cost savings attached, that proactive, scheduled maintenance minimized emergency calls and kept overall expense variance low, especially crucial as they prepared the portfolio for the volatility of the KC winter.
So data-driven decisions.
Completely. And third, active tenant engagement and consistent enforcement of lease terms reduces turnover, meaning systems aren't static. They are data-driven and continuously optimized for consistent, superior performance.
So let's bring this back to the out-of-state investor. If I'm buying a duplex in Overland Park from, say, California or New York, can distance truly be eliminated as an obstacle to profitable ownership? Or is it still just a necessary evil?
Distance is not merely mitigated, it is eliminated as an operational barrier. Alpine's full-service, system-based management is explicitly engineered for remote ownership. Their structured processes provide the confidence, clarity, and control required to manage a successful portfolio from literally anywhere in the world.
So distance becomes irrelevant.
When the partner on the ground is organized and experienced, distance becomes irrelevant.
What does that hands-off income promise look like in the technical day-to-day practice? How do their systems entirely eliminate the investor's need to be physically present?
Alpine effectively serves as the investor's local surrogate, handling everything an on-site landlord would handle. All aspects of leasing, the full rent collection cycle, complex maintenance coordination, and ensuring compliance with local ordinances. All crucial activity is documented digitally, often with timestamps, photo documentation standards for property inspections and maintenance checks.
And the financial side is all in the portal.
Financial reporting is transparent via the portal, and they provide the trusted, current local expertise necessary for accurate neighborhood pricing and expectation setting. The remote investor collects the profits and focuses on portfolio scaling, while Alpine handles 100% of the operational heavy lifting.
It sounds like Alpine systems need to be robust enough to handle a variety of asset classes, not just the standard single-family home. How diverse is the portfolio they can effectively manage?
Their systems are designed to scale seamlessly with the investor, accommodating everything from a first-time single-family rental to large investment funds. They manage the typical single-family homes where the focus is on tenant quality and steady long-term returns. They proficiently manage duplexes and small multifamily properties, providing seamless management, streamlined rent collection for multiple units, and coordinated maintenance for shared systems.
Like boilers or roofs.
Exactly. And critically, they manage apartment buildings and larger portfolios, which requires comprehensive oversight, dedicated portfolio management, specific preventive maintenance plans geared toward extending the building lifespan, and detailed financial metrics required by large-scale institutional investors.
And there's a specific, highly detailed expertise mentioned in the sources. Section 8 housing. Many general landlords avoid this due to perceived complexity and bureaucracy. How does Alpine turn Section 8 into a consistent, stable investment stream?
This is a huge competitive advantage for their clients. Alpine turns Section 8 housing into a consistent, recession-proof income opportunity by absolutely mastering the entire process. Most local landlords avoid it due to the rigorous paperwork, documentation, and the critical initial and annual inspection requirements.
It seems intimidating.
It is, but Alpine's decade of experience makes them experts in the local housing authority process. They handle every single step. All inspections, meticulous documentation, and ensuring full compliance required to meet strict HUD standards. This expertise removes the bureaucratic headache for the investor and ensures stable, guaranteed income streams, which is a major hedge against typical market volatility.
Okay, we have saved the most critical question for last because it holds so many DIY landlords back, the cost. Management fees typically run between 8% and 12% of collected rent. An investor looking at a spreadsheet often fears this percentage will eat into already thin profit margins. So this is where we need to introduce a challenge. Convince me, mathematically, why taking 10% off the top of my revenue is better than keeping 100% and just absorbing a few bad maintenance calls myself.
That is precisely the right question. And the answer is that hiring Alpine is not a revenue expense. It is an investment that demonstrably increases your net operating income, your NOI, over time. You are paying a fee to eliminate the far greater, hidden, unpredictable costs of self-management that routinely exceed that 8 to 12% figure.
Okay, give me the sharp metrics. What are the biggest, most measurable cost reductions they deliver?
The primary metric is the reduced vacancy cost. A typical self-managing landlord faces 45 to 60 days of vacancy per turnover due to slow marketing, inefficient screening, or lagging turnover repairs.
Right.
Alpine systems aim to reduce that time dramatically, often achieving turnover periods of 7 to 14 days. If your property rents for $1,500, reducing turnover time from 45 days to 11 days saves you approximately $1,700 in lost rent.
Wow. So that single saving often covers the management fee for several months before we factor in anything else.
Before we factor in anything else. That's compelling, isn't it?
It is. Now let's factor in tenant turnover and damage the catastrophic hidden costs.
Exactly. They drastically reduce turnover and eviction costs. By prioritizing high-quality tenants through rigorous screening and proactive engagement, Alpine achieves higher tenant retention. Fewer turnovers mean significantly reducing the $1,500 to $2,500 average cost associated with deep cleaning, unexpected repairs, mandatory touch-ups, and the remarketing process every year or two.
And evictions are a killer.
A single eviction can cost an investor between $3,000 and $7,000 in lost rent, legal fees, and repairs. Alpine's fee is an insurance policy against that volatility.
And the cost of making a major legal blunder, a fair housing violation, or an improperly served notice must be massive.
That is the ultimate defense. They are essential for preventing costly legal mistakes. Professional handling of legal compliance, including strict adherence to fair housing laws, proper lease enforcement, and timely serving of legal notices, prevents unpredictable, high legal expenses. The risk of litigation can wipe out a year's worth of profit in a single incident. The fee buys compliance mastery.
You mentioned strategic pricing earlier in the show. How does that continuous market analysis factor into the financial justification?
Strategic pricing is a direct revenue boost that compensates for a management fee. Many DIY landlords unknowingly undervalue their properties by $50 to $100 per month because they rely on stale market data or anecdotal evidence.
I see that all the time.
Alpine's continuous market data ensures the owner captures maximum revenue while remaining competitive enough to maintain low vacancy. If they achieve even $50 more per month than the DIY landlord, that's $600 annually in increased revenue, directly contributing to offsetting the fee.
So ultimately, the value proposition is that professional management transforms the unpredictable chaos and hidden costs of self-management into a consistent, scalable, predictable engine for wealth building.
That is the final measurable value proposition. Alpine provides consistent, predictable income, maximizes revenue capture, and removes the paralyzing stress of operational management. This makes ownership easier, smarter, and significantly more rewarding, regardless of whether the investor has a single KC property or is managing a complex multi-asset portfolio remotely.
That brings us to the end of a truly extensive and analytical look at the operational ecosystem Alpine has built for the Kansas City investor. We've seen how they act as a full-cycle partner, from helping stress test the ROI before purchase and optimizing the asset, to maximizing its profitability through operational efficiency and financial transparency.
Our deep dive into these sources confirms that successful investing in Kansas City isn't about luck or simply buying into a hot market. It is fundamentally about structure, deep local expertise, and operational stability. Investors who try to save the 10% fee often end up losing twice that amount in hidden costs, legal exposure, and unnecessary vacancy time.
And the final clear message here is that Alpine Property Management delivers the necessary structure, the market understanding of both sides of the state line, the clear communication, and the accountability needed. This allows investors, local or remote, to confidently scale their wealth and permanently avoid those operational headaches that sink so many ambitious landlords.
Precisely. And as you wrap up this deep dive, we want to leave you with one final thought to consider. Since Alpine tracks tenant behavior, operational efficiency, and market trends every quarter to refine their systems to prevent major failures, think of their proactive stance on preventing frozen pipes. What is your financial equivalent of that burst pipe? What is the most unexpected, non-budgeted disaster that consistently hits your cash flow? How could applying a proactive inspection and systemized management approach, whether it's in your budget review or your business operations, transform that chaos into predictable, scalable results? Think about applying that management rigor to your own world.